Today is Freestyle Friday. So I'm just going to talk about a lot of things in no particular order and to wrap up the week. So, what am I going to talk about? I'm going to talk about many topics. I'm going to talk about my face. Sharing videos in my chat groups. War. Where we are in the precious metals bull silver bull market, econ data that came out today for Friday, jobs and all kinds of stuff. What are corporations thinking right now? CEOs, basically recession expectations. Talk about confiscation, like future regulations and taxes, stuff like that for metals. What type of decline can we expect? My all-time high call that I made 2 weeks ago. And then we'll look at some charts for a little bit. Alright guys, first of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Consult your licensed financial advisor before doing anything. This is more of an educational channel. Me giving you guys my opinions and ranting. I could be completely wrong. I can't always be right forever. And yeah, stocks extremely volatile, extremely risky. Do not invest in anything you're not willing to lose or lose sleep over. So it's a pretty eventful week. It's been an eventful week, right? Very volatile, except for the indices, right, that have just been going up forever. Like nothing could stop them, right? Everyone's capitulating. Everyone just thinks the markets are going to go up forever, which for a contrarian like myself is good news, especially for my all-time high call, right? All right, so my face. All right, a lot of people say, hey, why don't you just talk into the camera so we can see your face? I mean, first of all, why do you want that? That's kind of weird. I don't feel comfortable with that. Sometimes I don't shave. My hair's... that's why I always wear a hat. I have hair. I just don't want to gel it. Like, I'm too busy working, right? If you want to see my face, go on my social media. You can stare at my avatar, my profile pic all day. All right. Not just that. Obviously, I screen share, which most people don't do as much, right? And that's how I deliver my information with visuals, which I think are more stimulating and people like, right? You don't just want to stare at someone talking into a camera. That to me seems extremely boring. All right. And what else? Also, sharing videos in my chat groups, right? I have a bunch of chat groups. And like I'm very, very lenient. I sound like a tyrant sometimes when I complain. But what I'm trying to say is, if everyone is constantly posting other people's videos in my chat groups, then a lot of people will subscribe to them, and then you might be less likely to watch my videos on my channel. Now, I'm not worried about them, like, competition-wise. I don't think most of them could keep up with me anyways, because most of them are just regurgitating echo chamber like topics or talking points, and there's no independent thought. Mainly because most of them don't actively trade a shit ton of money on the stock market, all right? So they don't actually have to think that hard. They just, most of them just buy and hold, and then they try to get ad revenue from talking about this stuff on YouTube, right? My channel is marketing for me to sell you guys my services, right? By the way, I kind of find it rude if people post other people's channels that are in direct competition. Like they actually provide a service similar to mine. And you guys need to understand the risk I'm taking with being public and making these videos. Because the future is going to look very different very soon, right? There could be social credit score system, which is already sort of rolling out. You know, anything I say will be and can be held against me. I don't know. You never know, right? You know, censorship, freedom of speech, it's all under attack. And anything I say that I put out there for you is a huge risk for me. Now, it's a risk I'm willing to take for now because these mining stocks are still very, extremely undervalued and making some extra income, which isn't that much. It's not a lot. Like, most people can't live off of it, but obviously I trade and invest, so I also have more income coming in. I even have a second business. But I don't have to do this. All right? It's a risk doing this. Matter of fact, it's very likely I'm going to not be public in the future, and my private group and my following on the chat groups, yeah, maybe I'll make you guys videos, but it won't be like public out there for everyone, right? And I'm not exactly looking to grow to be some huge influencer channel, because I think trying to change this giant cyclical time in history is pretty much futile. Like I don't think I'm gonna be. Yes, a person can change it, but you're definitely gonna sacrifice yourself if you try. And I think this is such a huge cyclical change in global geo and technological and financial and economic headwinds. The shift is so large. I will just be a bump in the road if I try to change it. If anything, I'm out here looking out for myself, and people who want to help me, I help them, and we're just looking to survive. All right, that's all it is. We're not looking to change anything. So what I'm trying to say is appreciate what I'm doing now, because it might not be around forever. Because it might become too dangerous in the future, right? I mean, economics ends up talking about all the important issues in the world, and it's going to eventually probably, who knows, it might get banned, you might get, you guys know what I'm saying. So, but you guys can post videos in my chat group. I like freedom of thought and expression and sharing information. That's what the chat groups are for. Just be cognizant of the fact that if you post a video and I don't like that person, because I've listened to everyone at this point, I'm going to just delete it. And don't take it personally. I just don't like that person, all right? Or if you just post a bunch of other videos, like, I kind of find that annoying, and I'm just going to start deleting. I'm not going to ban anyone. I just don't take it personally if I, don't like the video or the person. All right. So, where are we in this gold bull market? This is where I think we are. I could be completely wrong. Where is this chart? All right. So I posted this in the newsroom with more detailed parts on it, right? It's just that TradingView didn't save, or I closed it and I didn't save anything. So where is that chart in the newsroom? Here it is. Okay, I'm just going to use this. So the orange line is gold. The blue line is the S&P 500. Now this chart is macro, right? Long term. Every candlestick, there isn't even a candlestick, it's a line chart. But you can see the chart begins like in 1992 and is here at the current on the right? So X and Y axis. All right. So what I'm trying to say in this chart is, so history, it never repeats, but it does rhyme. Now, I get this question nonstop. When the market crashes, and at some point it will, and a crash could just be a 30 or 40%, 50% drop, right? It's not going to go like straight to zero or anything. Matter of fact, I don't expect that to happen because they'll punch protection, and then the Fed's going to like just run the printing presses like you've never seen before. Like helicopter money, MMT, whatever they'll do. They'll do whatever they have to. And why will they do that? Why I think it's very highly likely, like a 90% chance. Because the debt needs to somehow get wiped out. And it's easier and better for the elite, right? The corporations, the banks, and the government, for them to do hyperinflation than it is to just default. Because it buys them more time, and it's more sneaky. Like, people don't realize it, and they stay in power. Because it's not like such a big shock that everyone comes out with the pitchforks, right? So that's why it's guaranteed, in my opinion. And they've already hinted towards it. They've talked about it. That's what they're gonna do. They've admitted to it, literally. All right. So in the previous, right, 2008 global financial crisis, the first half of the correction, the crash, wasn't very steep. It wasn't very sudden. It was, but it wasn't. So let me zoom in. So this is the same chart as what I just showed you, except the S&P 500 is candlesticks. This was the 2008 financial crisis, right? So when it first started correcting, right here, right? Let me zoom in. These are monthly candlesticks. Every candlestick's a month. So initially, when it first started getting very volatile and the S&P started losing momentum, right? Actually, let's take it to a weekly so you can see it even better. Just give me a second. See, you guys want to see me talking to the camera? Well, I can do this, right? I can show you guys visuals. All right. All right, here's the crash. At the end of 2007, going into 2008, right? And it ended in 2009. So what happened when the market first started falling? Right here, right? Let me draw. When this was the all-time high in 2007, at the end of 2007, all-time high. What happened? The market dumped in a really big way. How much did it dump? It dumped 20%. Okay? While it dumped, gold rallied. And it's not going to play out exactly the same. We'll take it from the initial dump. But it will rhyme, right? I'm assuming it will. And gold rallied 26%. So the S&P fell 20%. Gold rallied 26%. In the first half of the crash, right? And then there was a dead cat bounce, a bull trap on the S&P 500. And this took 6 months to play out. And then gold started consolidating and falling. And then finally, after the bull trap was over, the crash continued in a really big way. This is when everyone was freaking out. Let me remove gold. And then here everyone just started freaking out. This is like Lehman probably happened somewhere around here, right? And then everyone started freaking out and the market started crashing hard. Now this entire correction from the all-time high was about 57%. 60% drop. Now, so let me remove this. I'm making it very hard to see. So the second half of the crash, what happened? Gold actually sold off with the S&P. Why is that? Margin calls. Everyone hits the oh shit, sell everything button and goes straight into cash. And then at the same time, the dollar rallies temporarily. Short term for like 6 months or a year or something like that is a safe haven. And then the bond market's supposed to rally, and then they come out, the Fed comes out with more rate cuts and QE, and then gold rallies again, right? So zooming in, you can see gold here. Let me change the color of this. I don't like it. No, let's make it blue. Make it larger. So you can see here gold during the second half of the dump, the crash in 2008, actually sold off on the futures market. Now that's the futures market, not on the physical market, not on the spot price, right? The physical market, gold never sold off. Actually, the physical stuff, if you wanted to go buy it physically, it never actually really sold off at all. It only sold off on the futures, the paper market, and the mining stocks. And then, of course, it rebounded and went into a huge bull market, right? So let me zoom out. And then it went into this huge bull market. Or no, that's the 80s. I did that back then as well after, what was it, Black Monday. Here we go. And then it went, so here's that dump, right, during the crash. And then it shot up. Went into a huge bull market, right? So I expect that to happen again. The question is, where are we? That's what's important. So a lot of people, they're not buying anything right now because they think they're waiting for this crash, right? They're waiting for gold to dump right here, right? And then they think they're going to get in at a cheaper price on mining stocks and everything. That might not be true, right? Because it all depends, prospectively, where are we? Are we here right now on gold compared to back then? Or are we up here? So let me remove the S&P so you can see it better. So where are we? Are we like here? Are we here somewhere? So this is the dump, right? Are we here right now, or are we at the top here and then we're going to dump? Well, I think we're here. Why is that? Because first half of the correction in the S&P, metals still rallied for like 3-4 months, something like that. And we haven't had the major correction yet. So assuming that it'll rhyme, not exactly repeat, there's still more upside. How high is that upside going to take metals? I don't know. I'm not a prophet. Could take it to 2,300. We could make a new high. Could take it only to 1,800. It might take it to 2,700. Now, that's only based on the financial markets. Right now, there's a high probability that something pops off in the sandbox, right? In the Middle East. I'm going to talk about that in a second. Okay, so I haven't even been considering that this entire time. So imagine if something really big happens in that region. US, Iran, Russia, China, mixed with global financial slowdown and recession, depression. I mean, this part right here, could easily shoot up to who knows, right? And then your mining stocks are eventually going to take off. They haven't taken off in a really big way yet. Yeah, there's a few that are like, 3, 5x baggers in my portfolio. Maybe 1 or 2 that are 10x. But that's like a few. That's not the majority of them. The mining stocks haven't taken off, guys. They haven't started really taking off yet. It's not too late whatsoever. It's still the beginning. But let's say the worst case scenario happens. Something pops off in the sandbox, and really the waters, the ocean around there, and the Strait of Hormuz and all that, right? Because it's important for the East, because the East has a huge trade route going through there, the Silk Road, right? And they're going to defend that area, and they want control over it. So, something big and bad could happen, right? Mixed with the largest global bubble, everything bubble in human history, financially, it's the perfect storm where metals are going to go into the biggest bull market rally bubble we have ever seen in human history. And those stocks, those mining stocks that are in good regions, like Canada, for example, they're going to do really, really well. Like, a 500x return is completely, possible. I'm not promising it, but I personally expect it. So what's a 500x return, right? It's like you throw $1,000 in and you get 500,000 out, right? If you perfectly time it, if a mining stock had a 500x move to the upside, right? All right. So this is where I think we are. It's more likely, right? I think we're somewhere here. Not up here. So I don't know how high metals will go in 2020, but waiting for the big correction, it might be, the wrong thing to do. Or it might be the right thing. I don't know. I could be wrong, right? You don't ever have to be all in or all out. You could do a little bit of both, just in case, right? So you don't miss out. Now, Peter Schiff had a good, his last video that he just uploaded, last night, was pretty good explaining the sentiment of the market for precious metals. 95% of Wall Street isn't even looking at it. And people are still worried about even going into the market. They still think there could be a huge correction in metals and the mining stocks. They think it's risky. So it's climbing on a wall of worry, which is good. And that's, as a contrarian, I think that's perfect, because it's probably going to just keep going higher now. And the mining stocks are nowhere near. The mining stocks in 2016 were higher than they are today, with the price of gold higher than it was in 2016. Let that sink in, guys. So let's take this to a daily so you understand what I'm saying. Actually, let me take it to... Let's do a 3-day. Let's add GDXJ. It's J. Okay, why? That was my fault. So GDXJ, I'm not giving any recommendations. It's just one of the ETFs, but it's for junior miners. Let's change the color of this to let's make it green. All right. as you can see right here, this is important. Look at that. GDXJ, the junior miners, one of these ETFs, was higher back in 2016 than it is today, while the price of gold, which is the orange line, is higher than it was back in 2016. So gold was 1700, hit 1700. Oh wait, that doesn't make sense. No, gold hit 1371 in 2016, right? And I made a ton of money back then. Just on this, just on gold going from it doesn't make sense. Oh yeah, I'm looking at the wrong y-axis. I have to look at the one on the left. So gold went from 1100 or 1050, that was all-time low, up to 1370. And the GDXJ, the junior miners ETF, had a huge explosive move to the upside, right? Well, look what happened this year, or in 2019. Huge move up in gold, right? It's gone up to, 1600, 1560, right? But look, the junior miners are lagging. They couldn't even take out the previous high in 2016. What does that tell you? That nobody believes in this bull market. The speculators, there's maybe a few, but there aren't that many. Basically, it's because all the other indices, the blue chip stocks, tech companies, unicorn ICOs, all this bullshit, everything else is at all-time highs, and everyone feels comfortable sitting in the equities markets because it's euphoria. The FOMO's taken over, the complacency's taken over, and nobody's looking at the metals market. Only the gold bugs and smart money. And us. When just 5%, just 3% of that market money comes out of those other markets and flows into the metals, it's the largest wealth transfer in human history. And I'm talking just a little percentage, 3 or 5. And a small amount of money, $5,000 invested in the right mining stocks could literally change your life. Now look at where it was, GDXJ, back at the all-time high of gold, right? Which isn't that far off, guys. So gold hit $1,900 in 2011. GDXJ back then hit, I'm not exactly certain, because I have to, okay. Yeah, okay. So GDXJ hit $175. Right now it's at $40. Gold's not that far off from the all-time high. It's only right now the price is it's actually heading back up towards 1600. It's what, $300-$400 away from the all-time high. But look at GDX, right? It's at $40. And guys, there's way better ETFs to buy that I've researched, right? So they all look like this. All the ETFs look like this that track the junior miners. And there's some new ones that I found that are going to be explosive in moves if gold makes a new all-time high and goes higher. So look at the upside potential. It's freaking enormous. That's how much these mining stocks are lagging the actual price of the physical metal. So as the price of the physical metal goes higher and the mining stocks lag, it becomes a bigger and bigger opportunity, especially for silver mining stocks. Guys, this is the biggest opportunity the world's we've ever seen in markets. I truly believe that. Could be wrong. Consult your financial advisor. But listen, these balance sheets of these companies are probably all they could recover very quickly if the physical metal hits an all-time high or tests it in 2020. Now, if it overshoots it and we make a new all-time high in 2020, which I think is completely possible, especially if something happens down in the sandbox and around those waters, right? Because there's a lot of naval stuff happening down there as well. We could it could happen. All right, the price could just shoot up like $400 in like 2 weeks, and the move in the undervalued mining stocks is going to be huge, like quick. It's going to be quick. And then everyone's going to start FOMOing, right? And because we have not had a FOMO moment in metals markets, okay, in the mining stocks, not yet. And all these other TA experts on YouTube, that gold bugs, this and that, they're so used to being in a bear market that a lot of them, they're not as excited as me, right? Because they've been conditioned by the market, essentially, to be constantly expecting the worst scenario and the manipulation and this and that. Like I said, guys, it doesn't take much for the commercial shorts, the banks, to get wrecked or to get a short squeeze. It really won't. All it takes is a ship down near the sandbox to sink or something, right? And the manipulation ends. And if you guys think like, oh no, it will never end, look, they can't do. They could only do it short term during like major resistance areas, but they can't stop a raging bull market in metals. They couldn't stop it back from 2002 to 2001. They couldn't stop it back then. What makes you think they'll be able to stop it now? Not just that, guys. This takes me into my next topic. A lot of people are posting videos of like confiscation, windfall taxes. Yeah, I've warned you about that. It's very possible. But the elites are all investing in metals. And they're the ones who control, the laws. So I don't think that's going to happen. And that takes me into the next topic. What type of decline are we going to see? And this is global. It's not just for the West. This will be a global event. There'll be more capital controls. Like countries don't want money flowing out, right? There will be more regulations, but can they actually... They might even come out with windfall, right? But with stocks, you have more mobility, meaning you could sell right before they do that and they come out the laws. And I don't think it's going to be that draconian because at the end of the day, the elites are doing the same thing as I'm doing. This is where they're investing, I believe. So why would they let that happen? They're the ones who are really, they're the ones who write up all the laws, really. I mean, that's why we have lobbying, right? All right, so anyways, you have no other choice. What else are you going to do? Right? Because everything else is in a bubble. So you're still better off, even if, they come out with windfall. Confiscation, probably not going to happen. I highly doubt it. When it comes down to that point, and that's for your physicals, right? So if you're holding only physical, I think it's actually a little more risky than the stocks, because the stocks you could always just sell at a whim, right? Just hit that button and you're back in cash and you're safe. But with physical, you actually have to take that heavy stuff and like go and sell it to someone, and that's when they get you. Like, you're not going to be going in back alleys and stuff. I mean, you might, but at that point, you're probably going to get jumped or something. Who knows? Because it turns into a black market at that point, and then you have the same problems as like drug dealers or cartels, right? So, and that's why you should do a little bit of both. All right, you don't want to do any one thing and throw all your eggs into one basket. You need to diversify. Also, with the stocks, you could sell on the way up and go buy real things, right? In the end, you don't care about metals. It's not about the metal. It's more about like what can you get for it, right? So you need a new truck, you need a house, you want to build a farm, you want to, build a business, you want to buy an apartment building, you want to build like some sort of machine shop or welding shop, or that's what this is about. This is about the transfer of wealth. So you want to sell your metals, and when you have physical, more than likely it's going to be harder, and you don't want to end up like selling at the same time as everyone else, because you're not going to be able to. And with the physical, they will like come out with laws when you go to sell it, right? That's when they get you. So, all right. Anyways, go to my website. I gave you guys a discount for 2 months. If you didn't take advantage of it, then it is what it is. And I do talk about one mining stock on that video on my website. And once you sign up and you get the initial report, then I send you an email so you get the updates and all of the new research and exciting research I've done in the past like 4, 5, 6 months. And it's only $10 a month. At least sign up for 1 month so you get all that, all right? If you've already gotten the report, which is $300, right? Which should pay for itself. Okay. Let's take a look at so this is what I'm talking about when so I posted this in the newsroom. Like, watch this video. I mean, these ships are taunting each other. Like I said, guys, the Middle East isn't just about, the typical stuff. It's changed because now we have Russia and China with interest in the Middle East, right? It's a huge hub for them. And this is what I'm talking about. This is on my social media. Look at this. This is China's One Belt, One Road, right? And they're building railways, oil mines or whatever, oil rigs, right? They're building bridges, they're building ports, they're building manufacturing companies, power companies, they're running pipelines, they're doing all kinds of things. They're putting in banks globally. This is China. This is like the heat map of China and what they're doing around the world. Look at this. They're everywhere. They've literally colonized Africa in a way, at least financially and industrially, right? I mean, manufacturing as well, right? And infrastructure. And this area, right? Iran's this one right here. This big one right here. See this red coming in here? That goes straight into the Middle East. And they need to spread out to connect Africa, right? So, and China and Russia are basically looking to push the U.S. out of this region. And so are a lot of the Muslim countries down there, right? Or the Arab, or the Middle East, pretty much, for most of it. Except, so, anything could happen, right? On the oceans around it. So, if they don't leave, something eventually will probably happen. And it could be bad for everyone involved, right? I don't want to profit off of it, but I will, because metals are going to go to the moon. And, initially we're investing in metals for, because of the financial bubbles that have been created, right? But you know what? I mean, if something happens here, it's also the number one safe haven besides cash and bonds. Well, bonds Bonds aren't, because they've been in a bubble now as well. So, in my opinion, that's my opinion. Now, there are inflation-adjusted tips, right? So, that's what I'm trying to tell you guys. Like, there's way more to it than what meets the eye. And these guys are probably going to end up being neutral. And, you know, if these two become friends and they have mutual interest, they're probably will be more powerful and able to push out the US, right? And this is crazy. This is scary because China has social credit score that, I mean, they're very evil, right? I mean, they have camps of certain people, right? Of Christians and Muzzies, and they're selling body parts. Come on. It doesn't get any more evil than that. And look at this. They're taking over. They're everywhere. A lot of people say that, you know, they're in bigger trouble than the U.S., but I don't know. Like, I don't know, because they have global influence now, and they just have so many people who will work for so little, you know, in the manufacturing they've built up in their country. It definitely looks like the East is going to be the next world superpower, which is scary. That's why I don't know where to move in the world. Also, if the lefties take over eventually, which I do think they will eventually here, I have a feeling they're just going to divvy up the U.S. and sell it out. I'm just being real, guys. I would not be surprised. So it could be some sort of globalized hybrid of just this country, which is just some horrible, scary stuff. All right, that's why I say it's risky for me to, you know, make these videos. Yeah, I mean, this is imperialism, guys. What they do is give loans to Africans, then they jack up the interest rate, then they can't pay it off, and then they go in and they pretty much confiscate everything and take over the land and everything. And who knows what they're going to do to those people there. You know? Alright, so we had some economic data come out from last month. And it's important because it's the fourth quarter, holiday season. That's the holiday season. So the fourth quarter is the most economic stimulant time of the year. It's the most economic stimulant time of the year because everyone goes shopping, right, and buys gifts and whatever, and goes into credit card debt. Average hourly earnings have dropped. Unemployment rate's doing great. Oh, no, that's Canada. Sorry. Actually, Gov payrolls dropped. That's actually a positive, believe it or not. But, you know, it's holiday season, and it's probably because a lot of them take a lot of time off. Manufacturing payrolls dropped. Very negative for the economy. Average weekly hours worked, dropped. U6 unemployment, which is more important in my opinion, it dropped. But listen, these are pretty bad economic numbers here. Non-farm payrolls, this is the one everyone watches. 145,000. Consensus was, expected was 164. Previous was 256, which is probably going to get adjusted down, you know, a few months later when no one's paying attention. So it's pretty bad. Unemployment rate stayed the same overall for December. Unemployment changed for December. Average hourly earnings month over month dropped. Private non-farm payrolls, which is way more important because it's the private sector. This doesn't include gov jobs because, you know, public sector jobs are a net negative for the economy because they don't add to the economy. They only take away. So the private sector's lost even more jobs. So economy looks bad. It's rolling over. It's been rolling over, but it's continuing to roll over. And the market just went, whatever. Let's look at these fat faces. Oh, it's fine, guys. Keep buying every dip. It's gonna go up. Now, why is that? because these idiots are like, well, bad economic data is great because the Fed's going to print more money then, lower interest rates and do QE, and stock market's just going to go higher because of that, which is destroys the economy even further. And eventually this just can't keep going on because the more money that goes, the inflation's all going into the stock market. But at some point, when earnings are so bad and the real economy has deteriorated so bad that it's just so dystopian that smart money will take the profits, and they already have. I believe they're already doing it. And eventually, you just can't ignore this. All right? And the debt will destroy, even if they keep printing, will destroy the markets as well. And then we finally get that big, huge drop. And listen, candidate Donald was like, it's a big fat bubble. This was like 4 years ago. It's still a bubble. He knows it. So it's a con game, right? Confidence game. As long as I keep people's confidence up, they just keep buying stocks. But, if there's a huge correction, don't you think they're going to be mad at him? So he'll be the fall guy. I don't know. Is this what he wants? Is this the plan? Trust the plan. I don't know, guys. Does he believe he could keep this game going throughout 2020? Does he just not care about his voting base? Does he want them to keep buying all-time highs? I don't know. I really don't know, guys. But this is going to bite him in the ass. Big time. And I've never seen anything like this economy. Yeah, nobody has. It's the biggest bubble in human history. It's Obama's bubble, too. That's what's crazy. This bubble is not one president's, but two now. That's how big it is and running as long as it has. It's gonna end in disaster, and he's gonna get the blame, and he has to know this. So I don't know. Maybe he'll just shift the blame to the Fed, or maybe he believes that the Fed can just keep it going higher and higher. I don't know, guys. I really don't know. Maybe my all-time high call was dumb because we'll get like hyperinflation like Venezuela, and the stock market's gonna go up another 10x. I don't know. I'm just saying. I don't know. Like, this is crazy. It's insane. Because I know that he knows. He knows what I know. All right. Yeah, low interest rates provided precarious protection against crisis, World Bank warns. So, literally, I mean, the WB, what is it? The World Bank says all of this QE and low interest rates has prevented a crisis, which, yeah, temporarily it has. It's kicking the can down the road, but it only makes the crisis larger. What's a good example of that? What's a great analogy that I have come up myself? You could check on my Instagram. I said this like 5-6 years ago. Greatest analogy ever. And I feel bad for the Aussies and the animals. I really do. And I really want to know the motive and who did it. Because if it's the climate change people need to run with that. So the world wakes up to reality. Not this BS. Right? Where is it? Did I not post this? Maybe I did not. So, if we go to my Instagram, or if you watch that video I posted in the newsroom, right? That was a good video. So if we go to my Instagram, look at this. This is Australia on fire, right? This is horrible. I feel for you guys out there, for you Aussies. This is a tragedy, and the only way it spreads like this is if people go around and they set them. And I heard those 200. I'm not sure because mainstream media will not cover that part of the news on this event. So, but what I'm trying to say is, my analogy is, so nature has a way of keeping the Amazon forest and all these forests from burning down to the ground like they are these days, right? How is that? Well, there's lightning strikes and the small fires just start all the time. And what happens is all the excess dry brush gets burnt away and the forest doesn't overgrow. Well, with human intervention, because of these climate extremists and government regulations, right? Because they screw up everything with more regs. What they do is they prevent people and find the farmers and landowners, and they prevent the national parks from doing controlled burns to burn away the excess dry that's built up over the decades. And, with these controlled burns, they create these breaks in the forest, right? Well, they prevent that because they're out of their minds. And what happens is the excess dry wood builds up. There's no breaks in the forest, and the whole damn thing burns down when a fire does start. So, yeah, So how does that translate to markets? Same thing with free markets. The free market, it has a way to remove the excess from the market, malinvestment, and bubbles. So the free market stops a bubble from growing into a big bubble. It'll let a bubble happen, but it'll take it out before it becomes a devastating bubble. And it destroys people and companies that do malinvestment or do stupid shit, right? Like companies who go public without ever making a profit. That would never happen in a free market because people wouldn't take such risk because they know that there isn't some bank out there just printing money out of thin air and pumping it into the market, making everything go up despite any real risk, right? So same thing with free markets. If the free market can't correct the malinvestment, then because central banks prevent it, then what happens is you just keep blowing bigger and bigger debt-fueled bubbles, and then the entire damn thing's going to burn down. All right. I've never heard anyone say that analogy, and I'm proud of myself for that one. All right. What else? You know what? I'm going to talk about the type of decline in a different video because that's like a whole different topic. Let's talk about my all-time high call. Listen, so far I'm still right. So what I'm trying to say here is, listen, I call the all-time high at 3,220. Now, I'm not right just yet, and I won't know for like a while, like 6 months to a year, who knows, right? Because the only way you know it's the all-time high is if the price can never get back up there, and you don't know when it can or can't until much, much later, like 6 months, a year, 2 years from now, right? All right. So I called it at 3,220. It went up to 3,280, something like that. It went up to 3,283. That's close enough, guys. That's like nothing, right? In the grand scheme of things. Like, no one's ever going to call it to the dollar. That's impossible. So, if this is the beginning of the major correction, I expect at least a 15% drop, something. Then I'm right still. And I'm still on track to be a legend. We'll know if I'm a legend like much later, like, halfway through 2020 or maybe even 2021, all right? So I'm excited and pumped about that because right now my indicators, they're looking good. All right. I've posted a bunch of stuff in the private group, and I've been keeping you guys informed that I think there's a rebound coming right now in gold and silver, and it still looks like this market's going to sell off. It's Take Back Friday today, and so far, the market did pull back, and we didn't make new all-time highs today because speculators always like to sell before the weekend. And listen, if a lot of these people have been holding for many months now, and they're sitting on huge profits, and it's the next year. So they didn't take profits last year to pay, cap gains tax on that. But this year, I mean, you're kind of pushing it if you think the market's going to go higher. And you might want to lock in those gains now that it's the next year as well. Smart money, I think, are selling into this. I'll make another TA video Sunday. Alright. What else was I looking at here? That's about it for the news. So let's take a look at a few articles. Let's just take a look at the overall news, and then I'll talk about a few things I want to talk about, and I'll close this up. How long have I been running? Alright, almost an hour. Alright, so no one's going to watch this. If you made it this far, congratulations. You are much smarter than the rest of them for having an attention span. Trump says trade deal might be signed January 15th. Okay, so now it might be signed. Might be. I don't believe any of this. Hopefully, I don't care anymore, and I hope the market just stops caring. Dow, 29,000, euphoria, melt up, yes. What else? One investor's asset bubble is another's anti-recession. True. So that's why when people say, well, just have a jubilee. Like it's just going to, you know what a debt jubilee is they just wipe out the debt. Well, one person's debt is another person's wealth, meaning you're still going to get a economic recession, collapse, if you do a jubilee, whatever. Because you wipe out a lot of people, you wipe out capital, literally. Which then people lose jobs, right? Like, people don't understand economics. So, that's good enough for now. Alright. BOFA, QE is analyzing a stunning 1.1 trillion in the past 4 months. 1.1 trillion of liquidity from central banks has just pumped in the markets in the past 4 months. That's insane. That's why the market's been going higher. Except to a handful of unemployed pseudo-academics on FinTwit who still refuse to accept the glaringly obvious that when central banks flood the market with liquidity, risk assets go up. Yep. Including the ongoing leadership from high-yield credit and U.S. growth stocks, the S&P and blah, 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 growth value large, small, back to at 2019 highs, is entirely due to the current maximum liquidity, minimal growth phase. As Harnett writes, the New York consensus continues to shift bullish on liquidity as a result of what he points out as fire hose out of QE liquidity from the ECB, BOJ, and yes, the Fed. So the European Central Bank, Japanese, and the Fed, essentially Western powers, is just pumping the markets higher and higher. QE analyzing a stunning 1.1 trillion in the past 4 months. That's insane, guys. I mean, this is QE. That's why that's why Wall Street just keeps holding and buying. As Harnett writes, the New York... Okay, so I just read that. Regular readers are well aware of this, as it was nothing but central bank liquidity as measured by the Bloomberg Global Liquidity Proxy that facilitated the unprecedented multiple expansion in the global markets, as 2019 was a year when there was no earnings growth to justify the S&P's near record 29% return. Yep. Look at that. So, again, another sign that we're near the end of the expansion is wage growth has exceeded unemployment rate. Every time it does that, we get a bubble pop. Or 2000... Same thing happened in 2008, 2001, right? When the NASDAQ bubble and the financial crisis happened. Unemployment hit all the time record low, and then wage growth started exceeding it, right? Rediscovering gravity. And this is all zero hedge, Tyler Durden. Consolidated S&P options are seeing both delta and gamma testing recent extremes. Right, so anyone who trades options has priced in this is the best possible alternative or outcome for the markets, but they haven't priced anything higher because no one expected that. So it's time for a reversal. And I don't want to get into gamma and all that, but it's pretty much what it means. So gravity meaning the momentum. Listen, the momentum, it's pegged to the most extreme. If you look at all the oscillators on the charts, it's absurd. It's pegged to extreme. So this market's about to lose momentum. All right. The yield curve, it did invert like what, 6 months ago? They need to peg yields on interest rates and get the short term to fall, right? So why am I pointing this out? Because guess what? I'm still expecting the 10-year yield to drop, which is very bullish for gold and silver. And it did drop today in a big way. And I expect it to fall all the way back down 1.6, 1.5, which should shoot metals even higher. Maybe even a couple hundred more bucks. We'll see in the next few weeks and months. That's what I'm hoping for. The dollar. This is a daily chart. It bounced nicely because of the tensions in the sandbox, but guess what? It's hitting resistance on the 200-day MA, and I expect it to drop back down temporarily for the short term. The Fed can't reverse the decline of financialization and globalization. Exactly. And the only way this ends is... Listen, because of this globalization, everything's so intertwined, not just financially, but manufacture. Like, listen, you buy a new car, like, all of the parts come from, like, all around the world. And that shipping logistics, if anything bad happens around the world, and let's say protectionist policies come up globally, which are trending now, right? And you have huge geopolitical conflicts and a global recession, right? Like, when you have a global recession, you're going to see companies go out of business here and there and this and that. And then you're going to see shortages on parts for other major globalized international corporations. And then they're not going to get their parts. They're not going to be able to build things. It's just going to be a huge mess. So that's what I used to talk about, the complexity theory. You can't have an international global economy quite this big because the complexity theory causes more complexity. And complexity, when something becomes so complex, one small thing that breaks causes a systemic problem, right? Like a domino effect, if that makes sense. So one company, let's say in Asia, goes out of business, doesn't produce this part anymore, then some US automaker can't sell that car because now they have to retool and start manufacturing that part, and that just takes months to do. Same goes vice versa with every other international company. And a lot of these companies, these big ones, the global ones, the internationals, that's why they're not for the, that's why they don't care about their host country like the US, right? That's why they sell it out. Wink, wink. It's because they're global. They need to play ball with everyone around the world, and they will do whatever the other country wants because they depend on that cheap labor, cheap parts, and that manufacturing plant all the way around the world. So what this all causes is everything is so intertwined, not just, manufacturing wise, but financially, that this complexity, I mean, it becomes unmanageable. And with a global bubble with debt, what happens is when it falls apart is these internationals really get hit hard. And that's another reason why I think they will do whatever it takes, meaning they will sacrifice fiat currencies to keep this going, because the fear of just everything falling apart probably scares them more than they would like to admit or show the public, the masses, right? So I'm going to end it on that note. Smash some likes, leave anything in the comment section, share my videos, go to my website, check out all the links below this video, and go into my chat groups. Alright guys, if you enjoyed this, found it informative, smash some likes. And wait, am I repeating myself? Alright, until next time. This was a long video. If you made it this far, thank you. I really want to thank you. And hopefully you learned something and you enjoyed it.